Good morning, everyone. Welcome back to another Market Mates episode. It's good to be back with you guys here today. Sunday night for our American and European viewers, and obviously Australia. It is Monday morning. Craig, mate, how are you doing on this fine Monday morning? How's your weekend?
Yeah, good, dude. Thank you. Hello, everyone. Hello, Greenie. Yeah, had my folks arrive last week from New Zealand, so that's pretty cool. So I got mum and dad here, so that's been keeping me pretty busy, just spending time with them, and obviously they're spending heaps of time with my son, which is pretty cool. So nice family weekend. We actually go today to a little Airbnb and surfers on the water there.
Nice.
Till Thursday, so that'll be nice, man. Just somewhere nice to put mum and dad so they feel like they've had a bit of a holiday rather than spending all their money just to come and stay at my place. Give them somewhere nice to go. So yeah, doing that today. How are you, man? How's your weekend? You've got similar things on, I think, at the moment.
Yeah, I got some family. So I haven't seen my sisters in about 2 years. They live in the UK. They're flown over. So we're catching up with them.
Two sisters?
Yeah. Two sisters who live in the UK, in London at the moment. So they've come back to Australia for the first time since we got married. So like January, like 2 years ago. So yeah, it's been a while. Like we saw him last year in Europe for my sister's wedding, but it's nice to have him back in Australia for sure. So yeah, look, it's been busy. I'm restructuring business and a range of things, like trying to improve content, rethink about strategies. Oh, dude, I've absolutely nailed Twitter over the weekend. I don't know if you saw, but I absolutely nailed it. Like, yeah, I'm in on a heater. So it is good. Hey, it's good. Hey, it's crazy. I threw so to talk on this before we dive into some topics today. AI is just getting incredible. Like I already used it before we chat with Zeneca last week. But what I did, I saw someone on Twitter go, generate your whole analytics from the past X amount of period of time and chuck that into some of these AI and get it to come up with like a content plan and tell you where you're good, tell you where you're bad. So what I did, I got my last 3 months and from analytics on X, and I chucked it into Claude and was like, okay, be brutal here. Like what works, what doesn't work. Tell me where I'm good. Tell me where I'm not good. What boosts engagement, what doesn't boost engagement. And outline kind of a content plan, what language to use, like what angles to use, how often should I post, when should I post? Like, yeah, you know me, I'm comprehensive with the way that I think about things analytically. And so I stepped away, I let Claude do its thing. And honestly, within 5 minutes, it came back with a full audit of like, okay, you need to do less. Like you need to post less was the first main point that it said. And it said you need to stop like not shilling GTG. So it's not like I do, but it's like any post that you tag someone or tag GTG or mention GTG, it already puts it down because the algo on Twitter knows that you're affiliated with that GTG is your product. So it's not going to go as well on the platform. Like it's all algorithms, right? And so I was like, okay, well, I already kind of knew that. I was like, well, yeah, like you got to find a balance, right? And then it was like, yeah, use curiosity language, use engagement language, do like 4 different posts kind of a day, right? So some engagement strategy ones, ones that are educational, ones that are market updates, and literally the biggest lesson I took away was post less, right? And I think that's a really good lesson because then it allows me to spend more time on Instagram and YouTube and in the community and looking for trades as well. And that'll help. I just think for me, I always thought quantity on Twitter was good. I think I was like led down that path that I thought quantity was good. Dude, it is literally within 3 days, I've had multiple viral tweets. Like I put an altcoin season 1 up that did 150K. I had influencer crypto bear market that did 100K. The follow up on the altcoin season 1 did 60K. I had another few like posts do 10K plus and that was all over the weekend. And I really I straight away saw, okay, quality over quantity is already happening within the past 2 days. So I was like, okay, well, it's nice. Like it's nice because I always thought, yeah, posting more led to more followers, led to more views. It's literally the opposite. You want to, if you think about it from a creative perspective, right? You want your audience to be waiting for you, right? They want that next video. They want that next piece of like whatever the tweet is going to be, right? Like they want to have the notification on. They don't want to see you spamming replies, spamming content all day long because like the good stuff will get lost between all the fluff. Like it's pretty common, right? So again, spend a good time analyzing it all. And dude, I've seen huge increases. So unfortunately, I won't be reposting streams anymore. I won't be promoting my YouTube videos on there too often because that obviously dramatically drops your X score and all those sorts of things. So, but yeah, dude, it's crazy. I mean, I should pull up the analytics just to show proof. But yeah, what are your thoughts after you hear something like that?
It sounds like an exercise worth doing.
Yes.
Especially because it's personalized to you. So that's what's amazing. You're not looking up generalized advice about how to, post or things like that. The fact you can customize it for yourself's pretty incredible, dude. Like that's pretty powerful, isn't it? For it to look over months and months of your work within minutes. Like it would take you so long to do that yourself, or so long for an agency or someone to look at this for you, like weeks or days, and then kind of be quite costly too.
Yeah.
So pretty gnarly. Yeah. Wow. Those are big jumps, eh? Wow.
So like I pulled up, I just, for those that are listening on Apple or Spotify, thanks for obviously tuning in, guys. And we appreciate you guys downloading our episodes. Make sure you rate us 5 stars. I pulled up my analytics and literally, Craig, over the past, since the start of March, I would consistently get between sort of 50K and maybe 150K impressions, which is just views on X. And followers was anywhere between 5 to 10 followers a day to maybe 30 in a good day. Over the weekend, okay, my impressions skyrocketed to 300,000 and my followers went up by 120 on Saturday. And then on Sunday, my impressions were 200 and something, 250,000. And my followers are up to about 75. So that is basically a 4x on followers, if not more. And it is basically it's like a 5-6x on engagement. Okay. And just a reminder, I'm posting less. I'm posting less than what I was doing, Craig. So the proof is in the pudding there. Interesting, very interesting. I mean, if you tap into trending topics, you use the right language, everyone's going to have a nibble. Everyone's going to have a nibble. But the thing you got to remember that CT, it's a game. It is a game of engagement. I know, I'll admit this. This is some of these strategies are engagement focused, but you have to you got to, as a business owner, the more I realize, you just got to put your content, your products out in front of eyes. You got to do what other people are willing to do. And if sometimes it's all well and good to stand on morals and to be this education only person, but unfortunately that doesn't get you what you need to do sometimes, Craig. So this is proof of the pudding happening right now in real time.
Yeah, that's pretty impressive results.
It is.
That's incredible. From 75,000 to 300 is pretty, that's amazing, dude. Yeah, well done. I'm going to have to get you to tell me all your prompts, man. Tell me how you did all this. So I could.
I wish I could build an AI business. I want to do that in time. I do want to do. I find it fascinating. I was speaking to the family all weekend, and so many people are, against it. They're worried about it. I'm like, look, of course I'm worried about it, but you've got to use it. It's like we talk about on the show often, Craig. It's like if you're using the internet, back in 2005, if you weren't using the internet, you're literally putting yourself at a severe disadvantage. If you didn't understand the trends that were emerging there and you shied away from it all, well, then naturally from there, you walked away from probably one of the best opportunities that humankind has ever seen, right? And it's the same with AI right now. So, it's an interesting time for me for sure. But yeah, it's good to see that it had immediate effects. It had immediate effects.
Yeah, and posting less, you said as well.
Yeah, absolutely. Yeah, I post now. I've gone from posting, I don't know, 20 plus posts a day to 5 to 10 sometimes.
Yeah, way
it's
better.
Crazy, man. Crazy difference.
Yeah, well done. That's pretty impressive. I need to do the same thing because obviously, if you can post less and get a better response, like you said, then your good content's not getting lost with your just shit posting and stuff like that.
Well, Big Tyler Durden even commented on my post, Craig, because it went that viral and it got on. Yeah, he doesn't follow me back, though. He mustn't approve of Greeny trades. So
he's I think he's pretty stingy with that stuff. Hey, I can hardly get a good day from him as well. I don't know. I don't know if it's bear market moods with Tyler. What's going on?
We really should try and get him on the show because he's one of the best traders.
Yeah, he's tough. He actually said maybe in March, so I'll follow him up.
Okay.
See if I can get him on. Yeah, see if I can get him on this month. I'll tell him it's my birthday, man.
I would say it's Greeny and Craig's birthday. We'd love to have you on, mate. We'd love to have you on. But GM to everyone in the chat, GM to Hutch, GM to Brad. Guys, we've seen a big pump, literally another Sunday evening pump in America, Craig. Bitcoin's currently flirting with $73,000, pushing up back towards 2 highs that it has put in over the past sort of week or two. Interesting times. Hyperliquid's at 37.5. We're seeing a decent rally across the AI meta. Tau's up 15% today, Near up 2%, Virtual's up 4%, Ethereum back at 2,200, and Solana back above $90 as well. I got tapped out break even, or not even in break even. I got tapped out with profit, my stop loss in profit of my short. So I'm only in one short right now. but it's in a real, I don't know, man. Like some of the traders I follow, like they're still cautious, and I'm very cautious here too. Like I think there's so many liquidity levels, and if you aren't watching the stream as well, like there are liquidity levels. We've got daily order blocks, we've got a weekly FEG that we're nearly tapping into soon if we get back above $75,000. So look, this complacency bounce could last a little bit longer. We could go a bit higher, grab all that liquidity, and then maybe reject again, then retest 59. Like maybe the 59K low is the low. Like we won't know until market price action really presents us with that information. But I still think we need to at least retest that, if not make one more leg lower and grab some of that liquidity below there. But Craig, yeah, it's good to see the market be a bit lively. Our hyperliquid's up, yeah, like crazy amounts in just the past couple of weeks. And Brad says Tower's low key cooking. Yeah, it's up 15%. It has flipped this massive weekly important level. Yeah, dude, look at this. Like dude, it is up. Oh, dude, I'm so mad, Craig. I had a long in this position, and I also bought spot, but I took profit on spot already as well. But hey, look, money is money. You make money. Again, I'm just cautious right now. I'm dealing with risk in other ways. We just took a mortgage on. We've got business loans, all this sort of shit. So I'm like, okay, well, hold on. I need to be my mind needs to be a little bit more focused elsewhere rather than looking for trades. But yeah, I mean that candle is crazy on the weekly. It's for Tau. This is up a 57% candle in the past week, Craig. Because I mean, this is what we spoke about. Like the hot metas are going to be DeFi, they're going to be AI, and the proof is in the pudding right now, and it has flipped that massive weekly level. So if you do see a bit of a pullback maybe into this region, that could be our higher low forming over the coming weeks, months, and that could send us into probably a breakout later in 2026, potentially into 2027 for something like Tau. But yeah, it's good to see, man. It is good to see. It's good to see.
Yeah, it's good to see these pop off a little bit when Bitcoin has a bit of a breather, isn't it? And you can sort of, like we've spoken about in the last few weeks, you kind of get to see what are the strong coins. What shows strength when Bitcoin shows a bit of strength, and also you can look at what shows strength when Bitcoin's weaker. But certainly, you've definitely spoken about Tau at length now on the channel. I know Rendad kind of been cooking last week as well. Looks like Virtual Z. I see Zcash is pumping today. Even Solana got a few bits. So I was like, hey, let's go Solana. So a few DGens have been celebrating that. But I'm the same as you. I'm just because life's pretty busy at the moment with parents and stuff like that, and some stuff I'm doing in the background. It's made trading a bit, I guess, suffer a little bit. When I say suffer, I don't actually mean it's not really a downside. It's just life, isn't it? So I'm sure other people are feeling like that as well. And just why Bitcoin's in this range, I'm just being careful with the entries. Like I'm just trying to be patient. And like you, I'm sort of waiting for that 59.60 tap again. But man, like you said, 59 might have been the bottom, dude. I don't, could be. Like it's one of those, like you've been speaking about, and I've been speaking about, you won't know when the bottom's in, really. It'll take time for that structure to form. So you will get indications of a bottom, but I'm sort of waiting for one more leg down, dude. But I mean, that's pretty famous last words for a bear market too. It's like
that is famous last words. But I mean, like to give you some reassurance, is the right word. Like for me, look, the low could be 59, and we bounce in this range for a long period of time, and that's what I've said for a long time. Like I don't really care where price is. I want to see time. I want to see range bound environment, reaccumulation levels. That's what I want to see. Okay. And just for everybody rejoicing in the comments saying, "Oh, Greeny, and you were all bearish," it's like, okay, my friend, like we would have to reclaim and have a weekly close above $94,000 for a market structure break / change of character in price. So good luck, brother. I don't think we're pumping anytime crazy to those sort of levels soon. So anywhere up until basically 94, Craig, and it's still a liquidity grab, if not higher. Like we could go all the way to 95, 94, grab that, and then still come back down to 70, 60K again. Like that's how price works, right? So look, there's a lot of liquidity up in these regions. We'll have to keep an eye on. There's still levels down at 57 I would love to see, but you just got to stay patient, man. Like, and as always, like we did see, like if we go back and look at the last bear cycle, we did see multiple bounces. Like we saw a 28% bounce here in that was in, when was that? January 2022. We saw a 46% bounce in April 2022. We saw a 22% bounce. When was that? In June 2022. We then saw another bounce. Okay, we went up 43% before we then continued lower as well. So you do get a pretty decent bounce off the lows in bear cycles. It's not uncommon. And a reminder, we're up 21%. So that's actually pretty much in alignment with what we've seen previously in other bear cycles is a 20 to 40% bounce in a complacency area, and then price continues lower. So I'm not saying that I think price does continue lower. I'll just adjust accordingly once it happens. But it is nice to see this to hold at least this range for a little period here, Craig. But I think the next move down, whether that's back into the lows of this range or down into a lower leg, is where I'm pretty keen to buy in that area, because that shows me, okay, well, I think time is therefore more on our side. And again, like, just to reiterate, the more you zoom out, Craig, the more you still realize that stochastic momentum, it's still at 44 percentile. It's still at 32. Like, this still has a long way to go. And the pivot is $100 and something thousand, $113,000. So, like, high time frame charts are still very bearish. Okay. So that gives me confidence that at least the next move, whether that's back into the range lows at 60K, 63K, or the move below there, I'm pretty keen to probably start aggressively getting into some of these positions that we've been talking about for a while.
Yeah, I'm the same. I'm still of the mind we go lower. I still think we get lower prices. I hope we get lower, but I also think, like what you're showing here, it shows us that we should probably see lower. I'm just going to have to be patient and try not get too excited on these little pumps. Although I will be rejoicing if we went to 98, dude, or 95. I will be stoked because I had that sell that didn't go through on my Magic Eden wallet. So if we get a little complacency, or that'll be a big complacency bounce, man. If it goes up to like 94, I'll just sell the last of that Bitcoin I couldn't get rid of.
Yeah.
That it didn't swap. But I'm still favoring lower. I'm still waiting for lower. I want lower. Whether I get it is another thing. But like we've spoken about, I think we've probably got still a good 6 months, like for that to happen, which is a long time for prices to go lower. So yeah, it's patience. That's the hard part at the moment, isn't it? Like, I'm really keen to buy. Like, I miss buying. I miss selling for profit as well, very much. I don't know, you're probably feeling the same. It's like, man, I'd love to get a good swing trade here for some good money. I've got to be patient. So yeah, please give me that 95K bounce, please. And then I'll repent for my sins. If we don't, I'm going to have to just hold for a bit lower and then ride it out. So yeah, patience, man. Unfortunately, it's a bit of a boring, like, I know people listening must be like, oh my God, I'm sick of you guys saying be patient. They want to play the game. You want to pull the slot machine, but at the moment, I'm like, nah, I'm not wanting to do little short-term scalps like that at the moment. Give me 59, dude. Break below 60, you dirty dog. Like,
I think anything for me now below 65 is probably fair. I think that's pretty fair value. And you have to adjust. Like, you need to, like, and that's a big lesson I've seen with thousands of traders that I've worked with is they get a number in their mind, and they marry that number. It's like, no, the best strategy you can have as a trader, as an investor, is being flexible and adaptive to what's happening in real time, right? So for me, it's all about making sure you stay relevant with what's right in front of you, okay, what's happening in real time, and adjust accordingly, because otherwise you're left holding a bag, or you're left missing an entry, right? Like, and that's the what, and then you feel all this, like, this worry that look, you just don't want to tap into that side of it, right? Like, you do need to be flexible. I think that's a big lesson I've learned, and I managed to do that over my past couple of years. So for me, it's really nice to try and educate other people to do that, Craig.
Yeah, it's a tough one, isn't it? Like, I've only had 2 goes. I've had 2 bull markets. It's my second bear. So I've had 2 bulls. So my second bull, obviously, I managed to sell going up or into all-time highs, some of it anyway. The lesson now is to improve on my buys in the bear market. So I missed the bottom last time. I was the bottom about 16.5, and I got in about between 28 and 32. So I did miss the bottom last time. I'm not saying I'll catch it this time, but the thing I'd like to improve is, like what you said there, don't marry a number. Look for structure changes. Look for patterns that would indicate a bottom, and don't be religiously chasing a number like I just said, like 59. But what I would really like to see is the bottom of that range retested, because I want to see what it does. That's what I'm interested in. Unfortunately, that's sort of on a weekly monthly, weekly sort of thing, not so much the daily. I want to see longer time frames, how they respect that if you want to call it support level, if you can call it that. Yeah, it's a tricky time, man. It's tricky.
It is tricky. And I mean, like, just to reiterate, like, this monthly stochastic indicator, like, price is often bottomed by the time it gets to, like, by the time that starts to flip bullish again. So I think the lesson here is, like, price actually usually bottoms on a monthly time frame, usually within a month or two before that stochastic crosses back bullish. So if we do take a look, like, price bottomed in November 2022, and then the stochastic crossed in Jan 2023. So it was a couple months after, right? The cycle before it crossed bullish in April 2019, but price bottomed a little bit before that in Jan 2019, right? So if you do go back and have a look at the history of price, the monthly stochastic oscillator is just a great indicator to know when the trend and market strength is now flipping back into bullish. Okay, here's another point, right? So it crossed again bullish in June 2015, and the low was in January 2015, right? And we did actually go back and sweep the lows again in August 2015. So the monthly stochastic, whenever that gets below or around the 20th percentile, that really confirms for me, okay, I'm pretty keen to get into some positions here for the long term. And it's a great, simple strategy. You then obviously can look at market structure, still have invalidation. So, for example, like, if Bitcoin was to lose 48K, well, then, yeah, that's probably not too good, right? So maybe I would have a stop loss there. So, yeah, it's all about adjusting your strategies, staying up to date, but being aware with simple strategies comes simple upside and rewards for those who are just patient, right? So I think that's the lesson there, Craig, is just to stay patient. Let's change to FOMC. So big news. We'll talk obviously US, which obviously impacts global markets, and then we'll bring it a little bit closer to home because it's definitely impacting markets and whatnot here in Australia as well. But the next FOMC meeting is in 2 days and 18 hours time. So that's 6 hours. So that's about 3 a.m. our time on, is that Wednesday morning or Thursday morning our time? So 99.2%, 350 to 375. The current is that. So they're expecting no rate cut, Craig, which is interesting in America, which to a lot of people's maybe not amazement now, because it is very much probably priced in already. It's probably not a surprise considering the war, the geopolitical risk, fuel, okay, being a big issue as well worldwide. Oil obviously rising quite aggressively recently. So no surprise to see that probably no cut happening in the US. The interesting alternative is that Australia is set to increase their rates in the coming days as well. What's your take here on, like, if this is already priced in, it's probably not, it's a bit of a nothing burger. You will always have volatility at these events because traders will be trying to trade one particular way, or they'll be watching the comments of whatever the Fed says and adjusting accordingly, because they do lead into why they've made this move, and then obviously moving forward, what their potential, are they hawkish or not, those sorts of things. So yeah, Craig, the FOMC, like, I mean, everyone was slamming everyone for rate cuts in America, and that's not going to happen, is the main takeaway.
Yeah, I think like you, I don't think this is going to have a dramatic effect on anything really. Like you said, I think it's priced in. No rate cuts been, probably been priced in a while now. So obviously everyone's pretty confident that's not happening. Tough time to trade if you're a trader and you're trying to do short-term moves. These sorts of times, I try and keep away from it really. Obviously, from an observational point of view, though, it is interesting, but it looks like nothing's really going to happen. It's interesting with us that we're raising rates, isn't it? Maybe that is better for us. I'm thinking, what are your thoughts? Do you think America's going to have to hike those at some point?
Well, I mean, I don't know. Like, I don't dive deep into the macro of America specifically because, like, at the end of the day, it doesn't really impact how we approach our day-to-day lives / markets. Like, price will just give you what it kind of needs. Like, if I was trading like stocks or ETFs and stuff, maybe it would be more impactful. But for me specifically, like, you can adjust it from there. The interesting part is that Australia's in a shitstorm, man. Like, We have 30 days worth of fuel as reserves. That's crazy. John Howard, when he was in prime minister ship back in the early 2000s, he had like 120, so like 3 to 5 months of fuel in our country. Now it's down to less than a month. Like fuel went to like $3 for a lot. Like diesel's like 2.8, dude. It's crazy out there. So um, the interesting part is that I actually watched. Is it Mark Boris as well, or whatever? He's quite a large um, podcaster worldwide, but he's based in Australia and has a lot of Mark Boris, sorry. So he's quite large. But yeah, he has great sort of comment around Australia, uh, economics, property, and whatnot. He's like, look, if you increase rates too much and too aggressively, then like it's going to slow the economy, and then you're going to have to drop rates already as well. So the question for me is like, well, should I be fixing a rate right now for our mortgage or not, just to lock it in for a short period of time? The trader in me says yes. The person who wants flexibility says no. We are set to see another rate increase in the coming days in Australia, and we actually saw rate increase last time as well, Craig. So they are expecting another one in May. So tough times to be in Australia. Affordability still through the roof. They're doing nothing about that. Meanwhile, Albo's running on the field supporting Alex Johnson scoring the most NRL tries in history, and he's on the field there, and it's all about Albo at the. Dude. I mean, politics in Australia is just like they won't. The thing you got to remember too is they love property in this country. So I think if you own a property, you're probably going to be well looked after. I mean, rent is getting crazy. In your like location where I live as well, like rent is nearly as expensive as mortgages. So like that just tells you everything you need to know, right? So there's it's no surprise to see some continued rate increases in Australia. But I don't know, Craig, what's your opinion on all of this?
Yeah, I mean, it's tough to be a homeowner in some ways when you hear things like this, but normally for the renters out there, you guys pay the price for this anyway, these rate increases, because then what tends to happen is rent goes up. So comparatively at the moment in Australia, it's been this way for quite some time, ever since I bought my home 10 years ago, rent was about the same. So if you can afford the things when you own a home, then you've got stamp duty and you've got all that stuff. So it's a bit harder than saying just buy a home, right? As you've experienced, there's a lot of cost to get in and to get out. So it's hard to. Flipping houses must be a nightmare, dude. Like, I guess you must get good at it, but you've gone through it now. It's not the smoothest process, is it?
No. There's thing, and like you pay $60,000 of stamp duty or something, Craig. Like, isn't that just absurd? And then you got fees, you got council fees. It's crazy. It's like it's honestly nearly not even worth it. I don't know.
Nah, it's ridiculous. And then, like when we first got into buying our home, we were like, oh, you think about flipping houses and that, and you'd love to do it, and you see the TV shows and that, and then when you actually buy one, you're like, wow, this takes a bit of
more complex than you think. Yeah.
It's complicated, but I think you've made the right move. You're either going to pay someone else's mortgage or your own.
Yes.
If you can afford to get in, I think you might as well pay your own. And like you said as well, if the guys at the top, with the way we work in Australia, property is the Ponzi we focus on. So I think owning property, at least you're swimming with the whales. You're playing in the same pool as they are. And if you're not in that club, you're kind of not in any club that's going to win, really, are you? Like savings, you're going to save. They're not. They're just putting all their money into assets, leveraging. What will be really interesting to see is if and when the markets pull back, how Australia responds to that. I'm really interested to see when things start pulling back, but just due to us relying so heavily on property and that Ponzi, it's going to be an interesting year, dude. We're coming up to we're in it now. Like,
it's a fact. I mean, maybe the bubble doesn't pop just yet, Craig. Maybe the world's not ready for
maybe
the bubble.
Maybe it never does, though, man. Maybe not. Maybe it doesn't really. What does even pop mean? Like when people say the property market dumps, pulls back, the real estate cycle comes to not an end, but goes to the start of its cycle again. Maybe it pulls back 10%.
Maybe 5%. Like I don't see why it wouldn't change. Like, I don't know. I mean, it's very country specific, location based. So do be aware of that. And as always, we're not financial advisors or anything like that. We're just commenting on what's happening in real time. But it's a tough. I mean, I think about it again from the diversification side of it all. I mean, I'm incredible. Like my situation is incredibly perplexed right now, and I don't like that. So I'm kind of like, oh shit, what can I do to like minimize risk, get out of debt as quickly as I can in certain ways? Yeah, double down on the business, like stay light. Like it's crazy, like the things you got to be thinking about right now. So exciting times, exciting times. We'll have to wait and see. We'll have to wait and see. Trump price jumps 52% as top holders compete for the Mar-a-Lago luncheon invite. A reminder, obviously, if you do hold the token or an X amount of token, you do get invited to these IRL events. But Trump price jumped more than 50%, which is crazy. Trading volume derivatives activity spiked as traders rushed into the markets. On the chart, the token broke above key resistance and levels after months of decline. Oh, Craig, what is the world coming to, man? What is the world coming to?
Who would have thought years ago that you'd have a coin that was tied to a president, that if you had enough of it, you got to meet him?
You could just go have lunch with him. Isn't that just, yeah, well, that's just a sign of the times, isn't it? It's just a sign of the times.
Almost criminal?
Yeah. You know, it is criminal. I think it is criminal. I think it is criminal.
Like I don't think anyone thought when Trump was getting in, we'd have to cop. I mean, I was pretty bullish on him getting in. I was cheering him on, and I must admit, I'm probably like a lot of people out there that have gone, damn.
Underwhelming. Yeah.
Underwhelming is a good word. And, he was big on, not to get too political, but he was big about keeping out of wars and things like that. You ran on that campaign, and now we're in one.
Yeah.
So I think the moral of the story is these guys are going to do whatever they like, when they like, regardless of what they campaign. But I do also think that no matter who gets in, the small people are going to get effed. So it's same old story. Another reason to get into crypto in some shape or form. I don't know about the Trump coin specifically, but I'm still thinking when this sort of effery goes round, for me, it still highlights the importance of Bitcoin for me. And I think we're in a time in the market now where it's quite easy to lose faith in crypto, and you might start to look at it, and when price pulls back, you start to see those headlines like Bitcoin's failed and this is broken and these things aren't working. And I remember that last bear market as well. I mean, Solana was a perfect story about that, dude. That dumped to $8. Everyone was like, it's over. And I mean, I know you were buying it at the bottom there, or pretty close to it. I was a bit after you there. So a round of applause for you, and especially for Easy, who bought the bottom. It did feel like it was over then. Like it did. There was part of me that, I mean, I never thought it was over, but you sort of go, ooh, it could be. Like for Solana specifically, or stuff like that. Yeah. So I'm just trying to keep my mindset positive, because during this next sort of year, it can get quite easy to become all doom and gloom and start saying, oh, there's no opportunities out there and this sucks and this is broken and all that stuff. So it's a tough time. It's a tough time to be a trader. I mean, obviously you and I are having conversations with people out there, and they're finding the same thing, aren't they? People are getting pretty, what's the word I can use? Despair? Are we at that yet?
Like boredom, fearful, despair. I mean, I just quote tweeted Ron, who comments frequently on my comments on Twitter. And sometimes he loves me, sometimes he hates me. It is what it is. But he made a really good. It's like, I'm not convinced crypto. I'll pull it up. His words. I respect him. I've known him for a long time, actually, on Twitter for a long time. But I'm not convinced crypto outside of Bitcoin will offer the same opportunity it did in earlier cycles. Well, I mean, that comment I agree with. Like, as market cap increases, yeah, obviously. What originally drew me into the space was the idea that individuals get in early before big money showed up. Well, yeah. Although VCs were always present, that was partially true for a while. Today, the landscape looks very different. Institutions, quant funds, professional market makers are deeply embedded in these markets now, or that's what happens in a maturing asset class. Retail often ends up providing exit liquidity rather than getting the early edge. Again, that's more of a problem that is your problem, not necessarily the market's problem. The tech stocks I held far outperformed any of my altcoin holdings. Yeah, don't hold altcoins, bro. I'm talking about coins outside Bitcoin where I was comfortable going in with size, right? Like, dude, we've spoken about AVAX and weakness for years, okay? And Link as well. That doesn't mean crypto is finished. Bitcoin increasingly looks like it's a durable asset in the space. The rest of the market still moves speculative cycles, but the risk to reward feels very different than it did at the beginning of last cycle or the previous one. And I quote tweeted and I said, this take gets recycled every cycle. And it's mostly right. I do agree with it. 99% of crypto is vaporware. Most tokens exist to make founders, VCs rich. And that's been obvious since 21, if not 2017. But here's where people get it wrong. Crypto doesn't work anymore, and crypto didn't work for me this time are completely different statements. Holding mega caps like ETH, Link, AVAX through a full cycle and comparing them to tech stocks isn't a crypto problem. I'd label that as a strategy problem. The edge in crypto was never to buy good assets and hold. It was identifying narratives early, trading the momentum, and getting out before the music stops. That has not changed. The players have, the conditions have. This is a maturing asset class. So you would expect this to happen. This means you either adapt or you become the exit liquidity you're seeing the timeline complain about. Crypto isn't dead. Lazy crypto / trading / investing strategies are. I think that's just such a reasonable take. And I've learned this because I've been in the industry for 10 years. And this is a sign of bear market. Like that's bear market proof right now. And it goes back to the same very fact that we talk about and why GTG literally exists is to teach you to become a better trader, a better understander of price action, of how to read simple charts, simple fundamental analysis of on-chain liquidity, volume, whatever it is, sentiment, narrative, people talking about it. As soon as you can understand the GTG framework, it's a very simple 4-step framework that I've designed from my 10 years experience. As soon as you start to understand that and implement that, you will stop doing what Ron has really discussed here. And that is simply trying to buy and hold tokens for a long period of time and hope that you outperform, right? Like if you held AVAX, like we cut AVAX years ago, okay? We didn't even talk about Link because it was underperforming the whole time. I was keen for Link at around $25. It then rejected a multi-year resistance level, so I cut. It then dumped to $4 during the liquidation event in October, right? So if I held that, I would have been down like 90%. You got to have an active strategy in these markets, particularly with AI coming to the forefront, Craig. Like, do you agree with that?
Yeah, I think it's a skill issue. Mainly
I
there.
I agree.
It's you've got to try. Well, in my experience anyway, you've got to trade based on what's the word I'm looking for? Narratives. You got to trade based on narratives, and if you can trade the narratives like we did pretty well last bull run, you'll come out okay. So there was a lot of people, this last bull run that said it was the worst bull run they've ever had.
I couldn't. I literally have the polarizing opinion of that. Yeah.
Like it was, you and I have spoken about this at length. It was different in the way that you couldn't just pick every altcoin.
Exactly.
But then what you said, you hit the nail on the head. You as a trader had to get better than the time before. So the time before in 21, I could buy any altcoin and it went up just about. Didn't matter. It went up 3x minimum.
8x in 2 weeks. Decentralized. Okay. Any of those bloody gaming net tokens. Like, it was crazy. 2021 is unreal. Like we will never ever see a 2021 euphoria like we did. Okay. That will never ever happen again. It'll never happen again.
And everyone learned from that, right? Yeah. So a lot of people that were trading in 21 got to 23 like myself and went, I don't think all these altcoins are going to pump again because in my experience, they didn't really do anything. They don't really solve any real world problems. So really, price just goes up on narrative for a short window of time. So you just have to catch narrative plays. And if you can keep your ear to the ground, and if you are a good enough trader, what I mean by that is you can look at a chart and TA and then marry that up with metas or narratives for that moment in time. It's what you said. You just got to be ruthless in and out. And do not hold anything based on its fundamentals, because as we've seen, you might love the fundamentals of Link, but it's at $9.46. So it doesn't matter. It doesn't matter how good you think the tech is. I mean, I'm here to make money. I don't really care about the tech so much, if that makes sense. Not the tech of Link. Like Bitcoin, I do in a way. That's a little bit different because I do believe in that fundamentally slightly different. But a lot of these altcoins, they don't need to exist. So, I think, and it's just a maturing of the space. We're maturing now. It's a good thing. It's a good thing. And it just unfortunately means that the average, you just can't throw darts at the dartboard anymore. It used to be easy mode. Unfortunately, that's gone now. So as a trader, you have to get better. You have to get better. And that's where somewhere like you just spoke about, GTG, is a good space to go, because in these quiet times now, this is probably where I'll do your learning now, because when the bull run comes back, it's hard to learn during that period because you should be trading, right? You should be, well, I maybe you shouldn't. I don't know. It depends how good you are as a trader. But
and how much time you have. Yeah. How much time you have. Yeah.
Yeah, you got way more time now than in a bull market. In a bull market, you've got DMs blowing up, you've got people wanting to connect, you've got companies reaching out, blah, blah, blah. Now it goes a bit quiet. Now's the time you should really be improving your trading, because as this last bull market, I think, probably proved to most of people listening now, you've got to understand it a little bit better than you did in 21 and probably 2017. I wasn't here then, but I suspect, what was that like? Was that a lot easier as well?
Oh, it's just, I mean, I'm not full time, so it's very different. Like, you are tapped into the market, but you could literally buy anything. Like, I bought Litecoin and that went crazy, right? Like, this is the first coin I ever bought in 2016 was Litecoin. Yeah, like it was like, there was, again, this is why you will never see an altcoin season again. Okay. There was less. Okay. Now there's more. So that already puts so much pressure on assets that are already in the market to thrive, because there's just more opportunities. Okay. Human attention is changing. Okay. You have TikTok brain rot, okay, out there for literally millions of people. Think about that. Think about how that will impact markets. Okay. Markets are now attention-based, narrative-based, speculative-based, hype-based, right? So even stocks are hype-based, speculative. Okay, where is that going? Where could that be if AI continues to go, right? It's the same with altcoins. Meme coins are the same. Meme coins that were thriving in the last cycle will struggle to maintain relevance in the future cycles, because there'll be new memes that just come out, right? Yeah. It's the same consequence with altcoins, okay? Like Craig said, you can have some of the most bullish tech in history. Arguably, Chainlink is a great example of that, but it doesn't necessarily translate to that token price going up. And that's a big lesson you need to understand if you're listening to that. And then this all comes back to the point of being, if you don't have the time to spend researching, to understanding price action, to studying it in your own time, join a community like GTG, where you have professionals like myself and Craig and others who will do that for you. And you just have to come in and say, hey, Greenie, can you give me an update on this? And I'll be like, yeah, brother, here you go. Or yes, sister, here you go, right? Or we literally do weekly live streams. We do literally weekly spot write-ups. I'll be doing more research deeper when the bull market turns around. Okay, why I'm spending time on AI, where I'm looking on chain, okay, what I'm looking at for particular trade setups, okay, for spot positions, all those sorts of things. You can get that for a simple package by just joining something like GTG. Okay, we've been around since 2023, dominating, okay, all of these different trends and cycles and stuff, because we actually are a supportive community and we actually focus intently on understanding what's happening in real time and therefore adjusting accordingly. Okay, we were early, okay, to a lot of those trends in 23, 24, Craig. Okay, we were then early to getting out of the market in late 2025. Okay. I didn't even trade meme coins in 2025 because liquidity was rubbish. Volume went down, manipulation went up. Like, that's horrible. You don't have an edge or probability anymore in that market. So why bother trading? Why bother gambling? Okay. That's the other thing. Like, so many people will still rather chase a 50x than just be comfortable with a 50% compound or a 25% compound over multiple years in something like Bitcoin or maybe some of these other tokens, right? It's as soon as you flip your mindset, you can still have a allocation of your portfolio into high risk assets or high risk opportunities and throw whatever that is, $500 a week on absolute garbage to maybe get that potential 10x, 20x, 50x, whatever it is. But you really shouldn't do that with the majority of your wealth. Okay. And if you don't have enough wealth, then you really need to get another job, get more revenue coming in, or cut down on your costs. Like, again, I've done this all myself. I've walked this road all myself. And that's why I try to educate everybody about that, because I fucked up. Like, I made so many mistakes in my past, and I'm now doing the right thing because I learned from those. And so many people don't learn from their mistakes and don't learn from their failures. And so my job is to try and help people understand where they're going wrong, how they can understand markets, how they can understand trends to their advantage. Okay. And I think trading is a lifelong skill. And I think it's going to be one of the best skills that you can have moving forward.
Yeah, I agree. And the thing with trading is you've got to keep upskilling. I think that's the thing that perhaps people don't think about enough. Upskill will change the way you think. And it's I kind of think of the analogy like when an athlete has their first season, they might have a breakout year in their first season and they kick ass, right? And then you'll quite often find in the second season, the second year an athlete comes, that people work them out. Other teams work them out. And I kind of think of the market like that. You might have a stellar first run in a bull market, and then the next bull market comes and you don't get it right. And I kind of think the market is kind of designed or works in a way that kind of tricks most people. Yeah. So you've just got to be able to adapt that second time around. So, hopefully people stick around this next bear market, learn, adapt, and have a better bull market. But I think to have a better bull market, you've kind of got to stick around now and take your lesson, and probably reflecting back on what you did wrong is probably the main takeaway.
Taking ownership, man, and accountability. Like I mean, you should do that in your own life, let alone in your trading life or your investing life. Like if you can't do that in your own life, you probably need to rethink how you approach things as well, because people who take accountability, don't care about other people's opinions, they're the ones that'll succeed, because they're not constricted by the box of life and other people's satisfaction. They're outside the box, taking risk on themselves, trying to build, learning in public, whatever it is you want to say, going with the trends, already implementing AI strategies. So I think that's a big lesson in itself. All right, we got a couple more articles before we end today's show. Hey guys, if you are new here, drop a sub, drop the follow. We've been live every day for multiple years now doing this Market Mates podcast, so we very much appreciate all of your support, and we hope obviously you guys appreciate all of our daily updates. But billionaire investor I'm going to say this wrong, Druckenmiller says quicker and cheaper stablecoins could power payments in 10 to 15 years. Craig, we've been speaking about this narrative for a long time. The question still remains, how do you capture that as a trader or as an investor? Does anything come to mind? Is it like, I mean, we spoke with Zeneca last week. He's an Ethereum bull, but he even said to us, he's like, I think EVM technology, I think EVM blockchain, I think Ethereum as a blockchain is fantastic, if not getting more bullish. But the token, okay, isn't as bullish as what he once thought about. I was like, oh yeah, that's an interesting take. I mean, for you, Craig, do you agree with that? Like, how do we capture this? You can't, because it's already being built by MoonPay, by Circle, by Tether, by USDC. Okay, these are juggernaut companies. Like, and unless you work for that company, you can't really capture the upside of stablecoins because they're a stablecoin. What are your thoughts here?
Yeah, it's a tricky one to capture the upside on these, especially on stablecoins. And I think perhaps it's what you and me spoke about. You've got to get behind the companies like your Robinhoods, your Coinbases, your Circles, and maybe buy those rather than a token. Stablecoins, buying those won't really help because they're not going to go up.
I mean, maybe they hold a better price than the actual US dollar or the AU dollar, so then maybe you do retain value. And maybe you could stake it. Maybe you do stake it potentially. Again, look into staking and do your own research. Okay, I don't actually stake anything, so always do your own research. But yeah, what do you think?
Perhaps, I mean, I would probably have to try and invest in the tech that goes above whatever's going to be running the railway lines.
Yeah.
So obviously the stable coins are the railway lines, but what companies are going to use those and invest in those companies? So it's going to take a bit of research for me, which is why it's a good time now. Now's the time you can look at this stuff. It's going to be very hard in a bull to look at this stuff. But I mean, I agree. I think stablecoins are going to be the payment lines. Why not? Why would you use, I mean, what is it Western Union and things like that? Hey, that's like what people use to get across the borders at the moment. But you're looking at like, could be $50 to send $5, right? So if you're in a poor country and you want to send $5 this way or that way, it gets eaten up with fees. So you can't actually do it. So this is necessary, and this is what I always saw crypto would come to. But it's like what you said, how do you capture wealth by doing this? I think investing in the companies that are actually going to use this but I don't know the answer to that exactly yet. What are your thoughts, Rennie? How are you going to capture this?
Yeah, it's a tough one. I think you got to go down the infrastructure side. Like, is Circle or something like that who has a company who has a stablecoin? But again, there'll be that many stablecoins. We've spoken about it for the last 6 months. Like, what was it? Texas, Minnesota. Like, there was random states being like New York, I think, as well from memory. Like, random statesmen were like, oh, we're gonna have a stablecoin that's gonna help our community, help our state here and wherever it was. So. I mean, and you're going to have stable coins that are Australian based. You're going to have them EU based. You're going to have pound based. Okay. You're going to have US based. So you're going to have gold based stable coins. You probably have China based. It's a yen. It's like, well, yeah, it's just basically, it's replacing currencies, but then currencies, you can trade currencies, sure. Which, I mean, you could if you wanted to, but I don't know, man. It's a tough one. It is a tough one to know how you can get exposure to that. Is it DeFi? Like, is DeFi? But then, what is the main DeFi? Like, Hyperliquid falls under DeFi, but that's a completely separate entity. I actually saw a really good bearish take on Hyperliquid. I don't know who said this, but it was Trader Main. It was Trader Main who said regulatory risk is Hyperliquid's largest bearish vibe, because at the end of the day, most exchanges that work worldwide do have KYC, and it's just going to get stricter. Like, and if you're trying to avoid it, you're an idiot, in my opinion. I'm going to call you. You're an idiot, bro. If you're avoiding tax, if you're avoiding all this sort of stuff, like you will get caught and you will have to pay a massive fine, or you will probably have to go to jail because you are tax evasion or income, like CG, whatever it is, right? So I think Hyperliquid will have to face the regulatory crisis in the future, Craig, because a lot of these top decks, I mean, the fact that it has billions of volume, like they have to regulate. It has to have KYC processes. Like right now, you can literally sign up with a wallet. Like it's crazy. So I don't know, man. That is actually something you need to be aware of if you are a Hyperliquid bull. And I agree with TraderMate's thoughts on that. As a trader who uses multiple other exchanges, like most of them, you do have to KYC. And if you don't KYC, it's usually because it's a little bit dodgy, right? So I do think, yeah, these are the sort of things you do need to be aware of. But yeah, I don't know, Craig. It's a great question. How do you get exposure to stablecoins? I don't know. I actually don't know. So speaking of that, the Ethereum Foundation traded OTC 5,000 ETH to Bitmine, the largest Ethereum treasury firm led by Tom Lee. But basically, these proceeds to sales support its ongoing activities, including protocol research, development, ecosystem growth initiatives, community grant programs, and whatnot. Tom Lee continues to accumulate Ethereum. AI developers may not be keen on crypto, but stablecoins are the secret to agentic finance, crypto insiders say. The main takeaways here is using stablecoins, again, we're talking about it, to handle millions of nano payments is quite different from using ChatGPT as a front end for shopping cart and plugging a credit card into it. Squaring regulated money transmission with a sea of agents and bots, which have no financial identity, requires programmable cash. Very fair. I mean, it's just further proves the point, Craig, that AI integration with crypto makes sense, but it might not look the way that we think it works. Like we were talking about AI integration with Ethereum last week, but now that we consider it a little bit deeper, like maybe it's going to be regulated companies or stablecoins, right? So, or stablecoins that are companies, like they're normal companies, right? So Web2 companies. So yeah, any comment on this? Is the last topic of today?
Oh, it's just such a tough one. It's just so hard to know where to go because you obviously want to capture that wealth, but capturing it for the average day person, it's not like they want to make it easy either. For the little people like you and me, they're like, oh, give us some of that wealth. Yeah, I don't have the answer right yet, but I guess maybe stocks, dude, things like that is what I'm going to have. I think I'm being forced that way now.
Well, yeah, data, infrastructure, minerals. Yeah. Exactly. Yeah.
Not back in 21. I didn't. I thought I sort of thought of crypto as an alternative to it. But now that AI has come in, they marry so nicely. I'm like, okay, I need to up my knowledge in that side of things as well.
Just diversification, right? Like it is diversification.
Otherwise, I think I'm going to miss out. Like if I just say just crypto, looking at the way the end of this bull market's gone, I did miss out. So it's a lesson there as well. I didn't have my finger in those pies, and they saw massive upside, even metals. Damn. But
will that 4 or 5x in a couple of months. So yeah.
Will that happen in the next decade though? I don't know.
Yeah, we might have to wait for the next 20-year period before we see. I mean, gold. But we spoke about gold in China and how they want to maybe make that the stable currency across the world. I don't know. The world is a funny place, and we're all just trying to navigate it, aren't we, Greg? It's interesting where the best opportunities to the upside will be. AI is now that disruptive tech, that disruptive opportunity, that speculative sort of asset class. Whether once those companies do go public, that'll be interesting. But yeah, crypto is still very speculative, still very down the risk curve, but it's maturing. It is in a very maturing time frame now, and I think it's very interesting. I still think Bitcoin obviously is number one, and it will continue to be, but yeah, you can't exactly use Bitcoin for payments and finances and stuff. So, I mean, stablecoins, are they going to be Web2 companies that come in and just build on the blockchain that's there already? Are they just going to use cheap and easy ones like Polygon or Solana or Sui or Say, and that's where you get your fight, but that doesn't translate to those prices going up because they're just using the blockchain. They're not using your token. So I don't know, man. It's an interesting time. It's an interesting conversation. We'll be having them in real time every single day on this channel. So make sure you drop a follow, guys. We do very much appreciate it. Craig, anything else you want to leave us with today, mate?
No, I just hope Bitcoin continues to pump, dude. Give me 98, give me 95 to 98,000. I can get
Bro's calling 98 when Bitcoin's at what, 73? 72.
Oh, man. I know. I think I'm dreaming, but no. Look, like we said, nice to see some green. The weekly actually looks okay, but unfortunately, I think we're going to see lower prices. Although I think that's exciting. I do want to slam the buy button, dude. So I'm like, come on. But like you said, don't marry the number. I think the key here is just to go slow. Like we've said, just DCA slowly. The only reason I'm a bit of a predicament because that Bitcoin didn't swap. So like I've got more than I want. So I've just got to get around mentally, do I want to buy more at sort of 65K? But then I've sort of also got to think, well, dude, if your plan was always to DCA in, does it really matter if the swap didn't go through?
No, if there's value, exactly. Like if there's value, right? Like you shouldn't, maybe it's more maybe of a whole portfolio reconstruction, right?
Yeah.
And a risk management side, then that does weigh into it. But if there's value, right? Because you think that it's probably going to go up, right?
Yes. That's what I'm thinking. I think it's going to go up, Greeny. The good news, guys, is I think eventually this price is going to go. I think eventually we're going to see higher than 73,000. Please.
Yeah, well, maybe later today if we get a liquidity pump up a little bit higher. I mean, I'm very cautious here. I actually don't really have a read on the market right now. I'm kind of just sidelined a little bit, just seeing what happens here with price. So I'm just a little bit foot off the gas at the moment. But mate, another great episode, guys. Thanks so much for tuning in. If you are new here, obviously drop a follow. You can find us on Market Mates on Twitter is our main account, but obviously you can listen to us on Kick if you want to watch us live. You can listen to us over on Apple Podcasts. You can listen to us on Spotify, so you can listen and download offline for you guys. If you can't tune in live every day, you can obviously do that. And obviously, if you want to watch us, you can watch us on our personal YouTube, Greeny Trades, Craig's Coin Purse, or you can watch us on X as well, which are our Twitter profiles as well, same usernames. Craig, mate, have a lovely Monday, and guys, we'll be back. We probably should say both our families are here. They're both from overseas, so we have decided to take Wednesday to Friday off, guys, because we don't get to see our families very often as they are overseas. So we will be live only tomorrow for Tuesday this week, and then or Monday in America, but we won't be live Wednesday to Friday this week. We thought it's a good time for us to spend some time with family. So yeah, we'll be back live again next Sunday night / Monday morning, but we've only got tomorrow's show for the remainder of the week. Just so you guys are aware, in case you don't see a few posts or clips from us for a few days.
Yeah, cheers, Greeny. Yeah, I'm looking forward to spending some time with family, and I think it's important to do that, especially while things are quiet. It's like might as well see your loved ones, get yourself spending a bit of time with them, and then come back and smash the market. But we will be back tomorrow. I'll get this uploaded now to Spotify, etc., so you guys can listen to it there. And yeah, Greeny, have a great day with your family, brother. And
thanks, mate. You too.
Yeah, thank you.
Easy.